I'd like to talk a little bit about what happened in 2020 in the private equity markets and what lessons we might draw for 2021. In many ways, the word resilience comes to mind when I think of 2020, because certainly back in the days of March and April, the dark days of when the pandemic started, it seemed like 2020 could be a disastrous year for the private equity industry. But once again, as we've seen through the history of the industry has proven remarkably resilient over the course of the year and heading into 2021. Nearly 70% of all transactions closed in 2020 did close in the back 6 months of the year or the second half. Similarly, if we look at things like exits and fundraising, yes, they were down because we had that blip in the second quarter in particular, but again, rising in the second half of the year as people became more comfortable fundraising and exiting businesses in a COVID world, buoyed by robust credit markets, loose monetary policy, and lots of fiscal stimulus to help portfolio companies and also help deal makers. And finally, returns were actually strong in 2020. The roaring back of the equity markets, especially in the United States, really supported valuations of deals that were not exited in portfolios. And for deals that were exited, because of the availability of credit, because of the big deep stocks of dry powder, we were actually able to see a lot of good exits at good multiples, driving real cash on cash returns for investors. The one thing I did notice that is different, and I think will have a substantial impact going into 2021, is that deal counts were down globally. So while deal values held steady, those deals were being done at much greater total enterprise values than in 2019. The actual count of deals getting done was about 1,000 less than one might expect. And that has a tremendous impact on investors who didn't get those deals done that they were planning to get done in 2020. So we've got about 1,000 deals that need to find their way to getting done into 2021, plus all of the deals that one would anticipate seeing in 2021. And we're already seeing this impact in the market. We're seeing record levels of registrations for deals, record levels of requests for due diligence. That is continuing into February. And I think the important thing to remember is that absent another black swan type event, those are going to be structural effects that are going to impact the entire year. This is going to be a tremendously busy year for deal making in terms of count, value, financings, you name it.